It's about dollar cost averaging and having a balanced approach to investing. That way there you lower the volatility and still remain. Welcome back in YouTube. We're going to talk about 2 stocks that you need to consider in 2023. So let's get into it. So we all know how important cybersecurity is becoming. I mean, it is a topic of conversation and the field is getting super competitive. And there's been one stock that's been heavily pushed on YouTube for sure.
Palantir and a new shareholder.
So Palantir has that going for them. This conversation about Palantir, no BS.
Now, Fortinet does sell cybersecurity solutions, things like firewall, antivirus, and they are reasonably priced when compared to its competitors. When we take a look at what analysts' expectations are, we have a price target from anywhere from as low as $57 a share all the way up to $85. Pretty substantial buy ratings here. We got 9 buys and 1 hold. So there's a lot of conviction with this stock. And when we think about how volatile the year has been, Fortinet has been pretty stable overall, only down 18% on the year. And when we think about a lot of growth stocks that are down 60, 70, even 80%, this one has held up nicely because the demand, I believe, is there and the fundamentals are backing it up, giving investors a little bit more confidence to buy a stock like this. We could see over the last month here that it has been a nice insider buying as the stock has been dipping and the conviction is there by the insiders by buying the stock, and it's nice to see that. And by the way, guys, if you like the information you are seeing here, today is the last day to get TipRank's massive discount. Click the link in the pinned comment down below and get yourself a massive discount on TipRanks. Your future self will thank you. And when we take a look at hedge funds that are actually starting to enter this position, we can see Ray Dalio at the top of this list. As we get more and more reliant on technology, the importance of security is just going to be so much more important. It's almost becoming a necessity of life at this point. Just as important as food and shelter is the security of your assets and privacy protection. The interesting thing is, I think you're going to have a great opportunity to buy a company like Fortinet, especially if we go into some sort of downward market. Now, me personally, I'm going to wait a few quarters here. I'm probably going to run a personal analysis on Fortinet here in the near future. So guys, make sure you like and subscribe as I will give you guys a price target of what I'm looking for to buy Fortinet at. So 2 major selling points to me on this company, and I just don't think this company is being talked about enough, is first and foremost, the growth on the company is still very strong when we factor in what is going on economically here. There's not going to be many companies that are growing over 25% over the next few years, and I think Fortinet has the opportunity to grow at this rate. Projected forward growth rate is still over 27%, which is phenomenal. Revenue growth rate is sitting at 31% year over year. Now, mind you, this stock does trade for a slight premium, but with that being said, there's a lot of companies right now in this sector that don't even have ratios because they are still unprofitable. And the profitability on this company is very strong. As we can see here, gross margins are pushing over 75% and EBITDA margins are pushing over 22%. So when we compare it to its peers, yes, it trades for a premium, but the revenue growth is there and the margins are there as well. So I really like this one. I'm going to give it a few quarters. This is one I'm keeping an eye on. So keep an eye out for the next video I drop on this company, as I'm going to do probably a deeper dive on the financials and get a clearer picture of personally what I would pay for the stock. But this is definitely one I'm adding to my watch list come 2023. You know, and when we think about the leaders of the S&P 500, the Apple, the Google, the Microsofts, the Teslas and the Nvidias, I can absolutely see a cybersecurity company becoming a little bit more outweighted in this index. It would not shock me if in 5 or 10 years we see one of these types of companies actually leading the overall index, as the growth rate in Apple is definitely going to slow down here. And I'm also looking at a company like Google for more of a value play in 2023. We have to think that the Fed's fund rate pushing over 5% is absolutely impacting compressions on multiples, guys. And I've talked about this numerous times, and I know people that have been subscribed to the channel, you all know how I feel that I think the opportunity is going to be coming in 2023 when it becomes the investing side of things. I still think this market is overall expensive, and I think there's going to be a massive drawdown, and therefore Fortinet and Google are 2 stocks that I'm absolutely keeping an eye on for 2023. And I do already have a price target for Google for me personally. Now guys, this is a wish list price target, so please don't get offended when you see this, guys. So personally, me, I have a price target between $77 and $80. And that's about where I really get excited about accumulating shares of Google. When we think about what's going on with Meta, we think about what's going on with companies like Disney. They are fundamentally broken right now. And I think there's a tremendous amount of upside when it comes to these type of companies. But what we have to take into consideration is you're taking on a lot of risk, as the investments that Disney and companies like Meta are making right now may never pay off. And that's the truth. But if they do pay off, you are going to get 5-6x on your investment. So the risk versus reward, while it is higher in a company like Meta or possibly Disney down the road, I look at a company like Google that's starting to become unappreciated by the overall market. And I do think there's going to be an opportunity here. So this is personally what I'm looking to do with Google, guys. So, like I said, this is my ideal price for a company like Google. And I want to wait another quarter or two on Fortinet just to see that they can get through that they have some visualization at the end of 2023, as a lot of companies right now do not. So I want to just make sure that the company's still executing at a high level and I can pay that premium for the company. And when we look at Google's chart, we can see that it's kind of been an ugly story for Google. And they recently have made layoffs, and that is going to absolutely help weather the storm through a tougher 2023. And this company has hit $83. And if it did get back down to these levels, guys, I am going to start adding a position into Google. So I'm more ready to buy a company like Google around this $80 to $83 mark. And I'm giving Fortinet, and I'm waiting for Fortinet more of 2023 type of purchasing. So it really comes down to, do these companies hit my price targets? That's the main focus I'm thinking about when I'm looking at these types of companies. And once again, I would be taking a barbell approach with a company like Fortinet, guys. And if you're not familiar with the barbell approach, I would be offsetting a company like Fortinet with an extremely low beta, high quality type of company. That's going to be a company like a Coca-Cola, Johnson & Johnson, or maybe even an index overall. I would be layering on the offset of buying a company like Fortinet. Meaning if I buy Fortinet, I'm probably going to be buying the S&P 500 on the other side. So if we get a massive drawdown in the market and we get a massive drawdown in a company like Fortinet, I would be buying the overall index and I would be layering that in with the actual individual stock of Fortinet. This is kind of the approach I'm taking going into 2023, into 2024. I know a lot of you have been following my barbell theory, and I just think it's a great way to invest. It's never dumping all your money in at one stock at one time and trying to time it perfectly. As I stated before, I do believe companies like Disney and companies like Meta have fundamental problems that they still need to get over. It's going to take some time to get over that, as Meta has made it clear that they're going to be investing in the future for a substantial amount of time, and it's probably not going to be until the mid of 2024 before we start seeing those free cash flows come through once again. When I look at a company like Google, I don't see those problems really in the near future. I see them maintaining a sustainable business model and their cloud aspect becoming more profitable in the near future. So therefore, I think there's more opportunity in the shorter term for Google, and I think there's more question marks in the shorter term for a company like Meta or even possibly Disney. And that's why I'm leaning more towards looking at a company like Google for 2023 and a company like possibly Fortinet on a big dip in 2023 as well, as I think the demand and the economic backdrop for cybersecurity is absolutely not going anywhere, and they have a tremendous TAM right now, total addressable market. When we look at quality and pricing, they are in that wheelhouse too. So I like that aspect of their business. They're growing top line, and they're also profitable, right? So these are things that we need to look at when we're buying companies, as we've been seeing that companies that are unprofitable are unacceptable in any sort of market where interest rates actually have a substantial amount of cost incorporated with them. So as always, guys, these are the two stocks that I'm looking for 2023. Hopefully you all enjoyed that. We will see you next time, investors. Peace.